Buying cryptocurrency is a great idea for people who are looking to invest their money in some other currencies. If you want to avoid fiat investments and want to put your money into other investment vehicles that are going to yield positive returns, there are some important factors that you should take into account when it comes to investing your money in cryptocurrency. With so many different options available, you have to be quite careful. Many people want to buy Bitcoin, but that's not the only cryptocurrency available out there. Here are a few important factors to consider before you decide to invest money in crypto. Before I continue, in case you are worried about what all these cryptocurrencies might be heading to, don't give up. I almost gave up too until I came across CryptoFX Network cryptocurrency investment platform, www.cryptofxnetwork.com, where I get profit on my invested cryptocurrency after 10 trading days. Don't be left out. Be like me. I still believe in cryptocurrency. Please note, this is me just telling you about my personal experience. So far so good about investing on the only legit cryptocurrency investment platform I have seen online. I am in no way trying to advertise or give you a financial advice on how to spend your money. You can make your research, and if you find the platform deem fit, then you can go ahead just like I did. 1. Which currencies do you want? The first and most important thing that you need to decide is the currency that you want to invest in. You need to do a bit of research on your own first and figure out the best cryptocurrency that you should invest in. As is the case with most investments, you should do your research very carefully to figure out which currency is the best. You will want to make sure that you avoid putting your eggs in one basket. Always diversify your investments as much as you can before making a decision. You need to do careful research to ensure that you put your money in the right places. 2. Check the history. How has a particular currency been performing? Before you decide to invest your money in any cryptocurrency, you need to check its history first and foremost. You need to make sure that you check its trending performance to get a better idea about how it's been doing. This will make it easy for you to decide whether the amount is going to yield positive dividends or not. It's important that you check the history of the currency first before you decide to go ahead with the investment. This is particularly important if you are new to the crypto markets and are just getting up to speed. You might want to subscribe to a few newsletters to get a better idea about the latest currencies that are making the rounds and attracting investor attention. Most newsletters contain detailed information about statistical past performance of recommended currencies. 3. How much money do you want to invest? Another very important factor that you need to consider is the amount of money that you want to put into your crypto. It's important that you avoid putting all of your money in the crypto markets, as there is a big risk that you could end up losing all of it. Many people have ended up losing millions in the crypto markets, and you don't want to be the next person to do so. To avoid such losses, it is always recommended that you start by investing money that you can afford to lose. For instance, if you want to buy Bitcoin, there is no reason to put all of your savings and convert them into Bitcoin. Instead, you need to start with a small investment, and then see how it performs. This will give you a better idea about how your money is moving, and more importantly, it will give you the confidence to invest with ease in the future. 4. Developer activity. Another very important factor that you need to consider is the developer activity. How active is the developer? Almost all of the stronger projects have a considerable amount of developer activity. You need to make sure that you check GitHub for a better idea about the developer activity, and then determine whether the cryptocurrency is resulting in considerable developer activity. All of the work that is done on GitHub is public, along with the metrics of a particular project, which makes it considerably easy for you to determine the level of activity being generated. 5. Your risk tolerance. Last, but not least, is the level of exposure that you can tolerate. You need to be particularly careful about this one. Make sure you do not invest more money than you need to, otherwise you could end up with a serious loss that could affect your future plans. It is crucial to have a good understanding of what you are investing in before you start your investment. Many people make this mistake and start investing in cryptocurrencies without having knowledge of the same. There is no way you are going to be benefited with the investment if you don't even know about the technology behind it. Start by understanding the underlying technology behind cryptocurrencies, i.e. blockchain, and then head to cryptocurrency. You can find many guides regarding cryptocurrency on Google, but make sure you rely on a trustworthy source or website for that. One more important thing that you need to understand is if the coin you are going to invest in is a security token or utility token. You need to be aware of the clear difference between the two. Dig deep into the web and find everything you can regarding the top. Bitcoin is the source of income for many people who obtain large amounts of profits. People invest in Bitcoin in different ways. Some buy Bitcoin especially at the time when the price declines and then keep them safe. Later they sell it when the price rises, and this gives them huge earnings. Sure, you can decide to pick any cryptocurrency to invest. Remember to diversify and work with reliable exchange services and brokers to protect your investment deals from any fraud. There are numerous platforms designed in order to invest and manage your cryptocurrencies. One of such platform is Zippercoin. Zippercoin. Tech a well-established mining and investment institution that enables investors get adequate return of their investment in a short space of 4 days. What to do before investing in cryptocurrencies 2020. 1. Project strategy. If you want to invest in crypto for the long term, the first most thing you need to look for is the reliability of the coin. The following can be predicted by evaluating the team involved in the project as well as the strategies they are relying on to accomplish their mission. If you have doubts for a particular project or about their founders, it's better to stay away from it. 2. Security token or utility token. Once you are done researching the project, the next thing you need to look at is the functionality of the coin. Know if the coin is a security token or a utility token. It is always better to invest in the security token as it provides you with the ability to contribute to the decision made in the company. 3. Total supply and market capitalization. Secondly, what you need to do is evaluate the coin's total supply and the project's market capitalization. This information will help you know the value of the project. The supply of coins plays an essential role in the price of a coin, given the basic principle of supply and demand. For instance, if you look for the current value metrics of Ripple, you'll find out that the total supply of the coin is around 100 billion with a market cap of $10.6 billion. According to some of the investors, the high supply of Ripple is limiting its value. And when you compare these altcoins with the total supply of Bitcoin, you'll find a huge difference as it is only 21 million. Some argue that the lower supply of Bitcoin is the reason for behind its higher demand. 3. Price records. Don't forget to check the price history of the coin you are interested in before you start investing in it. Just like bonds and stock, knowing why a coin's price increase or declines help in evaluating its long-term value in the market. The price history tells the whole story behind the coin. The value of coin also represents its connection to stock market moves and the prices of other currencies. For example, you will notice that whenever the Bitcoin price soars, there's relatively a decrease in the price of altcoins. This might be because as the leading cryptocurrency and the primary coin, mostly Bitcoin is used for trading other altcoins. With the increase in the purchase of Bitcoin increases the selling of other coins, which leads to a rise in the value of Bitcoin and a decline in the value of altcoins.